community is exploring and experimenting with mission-driven innovation. And we have two of the best to kick off today, people who are really on the forefront of thinking through what kind of direction, again, the international community and really the world should be thinking about some of these issues. I have the pleasure and the honor of reintroducing everyone to Agustín Carstens, the general manager of the Bank for International Settlements. And today we also have the special treat of Kristalina Georgieva, who is the managing director of the International Monetary Fund. Now, this is a special treat, a great conversation, and I'm really, really excited to kick it off. Welcome to you both. Managing Director, I guess I'll start off with the IMF first. What comes to mind for you as the head of the IMF when we talk about financial inclusion? What financial inclusion means kind of differs and varies. What does it mean for you?
Thank you, Chris. Fantastic to be with Agustin and to the Georgetown students, Hoya Saksa.
You are.
Good morning, good afternoon, good evening to everybody. So what comes to mind is that with financial inclusion, we have now 1 billion people that were excluded before joining the functioning of the economy. And what we know is that digital money and digital transfers are making our societies more inclusive and our economies more productive. But we also have to manage risks. So what do we do at the IMF? We are invested in how financial technology changes the way economies and financial systems function, and how the international monetary system adjusts to these technological advancements. Within financial technology, digital payments, digital money. We know that digital payments truly revolutionized the lives of people. I mentioned the 1 billion new users, but even those who were included before, they see more opportunities and lower costs. Leapfrogging is a reality, and we saw it very strongly in the context of the pandemic. And so let me just make 3 broad points. How access to digital payments fosters financial inclusion. First, now for all the women that are listening, Fintech helps narrow gender gaps faster than traditional finance. We have seen the share of women with mobile phones greater than the share of men with mobile phones in the Philippines, Haiti, Lesotho, Botswana. More women means better opportunities for their families, their communities, their countries. Second, the thing that we sometimes don't pay enough attention is that digital payments offer our first step into formal financial inclusion. So what we have is previously informal market participants accessing loans and other financial services, in other words, becoming part of the formal economy. And the third thing that is very, very important, when users can have access to savings, to payments, everybody is better off, but it is particularly visible for low-income households. So the poorest people, in relative terms, are those that gain. Now, all of this is great, but we also have to be clear that it's not all perfect, and there are problems to wrestle with. Problem number 1, well, we need the technology to be in place. If the technology is not there, inclusion is hard to happen. And this uneven access to infrastructure, but also to institutional capacity, is something that for the fund is a big obstacle to overcome. We also need to remember that we may have through financial inclusion, digitalization, fintech, a bit more vulnerability. Why? Let me just say one word: cyber attacks. So we have to be very prudent in advancing financial inclusion, but doing it mindful of prerequisites and managing risks.
Yeah, that is a great way to sort of frame the questions. I've got to say, as a Georgetown professor, it's so fascinating, to see the IMF tackling this question of financial technology and also the inclusion side. The IMF has its traditional focus, on these larger macro questions of financial stability. And certainly financial technology from time to time has created risk in that way. But to sort of think about as well the opportunities and the IMF's role there is really something that is fascinating. And just sort of a quick, brief follow up. Do you find that to be part of then the evolution of the IMF's mandate? I mean, when you think about, again, financial technology and how it's impacted this overall question of inclusion.
But the simple reality is, if we used to say before the future is digital, we have to accept that the future has arrived. And for us, for the international monetary system, for the way countries develop their monetary policy, we have to think about the role of technology, digitalization, as I said, digital payments and digital money, and then integrate that in the way we think of international monetary system. And that is fascinating. And I'll give it just one little snippet. And it is something that we must do for our members. We did a survey of our members, how many of them are thinking of CBDC, central bank digital currencies. 110. So we have 190, 110 out of them, some in very early stage. They're just thinking, what is it, what we should do, all the way to the Bahamas that issued the first CBDC, the sand dollar. I was with the Caribbean countries yesterday. Well, quite a number of them are advancing in that direction. We know China is piloting, and we know that there is already a work on interoperability of central bank digital currencies that Agustin can talk about, because they're leading this work. So, simple fact of life, we have to embrace it, and we have to make sure it works for everyone.
Thank you so much for that. And indeed, just yesterday we had Timothy and Antoine from the Eastern Caribbean talking about their CBDC project. Mr. Carstens, you've obviously joined us yesterday. You've just been brought up now, and again, the BIS and the evolution of the BIS, I tell my students, is just a fascinating story. And your own career has been one of evolution. I mean, you've been had a past role as the finance minister of Mexico, the governor of the Bank of Mexico, and your mandate in those roles has also had this very interesting engagement with inclusion. When you look back over your career, and then when you think about where you are now at the Bank for International Settlements, again, inclusion can mean lots of different things. Maybe it's evolved for you over time, but what do you think about this question of inclusion? And are there any key innovations that you see or that may be particularly helpful, or policies that you think may be especially supportive of achieving financial inclusion?
Well, thank you, Chris, very much for having me. And I certainly support all the comments made by Kristalina. Your question is very, very important. What I have learned are many things in financial inclusion. I mean, one of the things that you need to do as a public servant is to learn from the challenges you have had, and really to try to fine tune through time your strategy. I think probably the most difficult issue with financial inclusion is that you need to bring several critical things together to work at the same time. I mean, we can talk a lot about technology, and for example, Fintech Week is a great opportunity to talk about the technology. But we also need regulation. We also need electricity. We also need the broadband brought to the remote parts of the country. So we need to work. I would say central banks, ministries of finance, they should try to work as a catalyzer to bring all the elements that are necessary together so that it is possible to do precisely financial inclusion. One that, for example, I think is key and that implies many hurdles, both from a political front but also from the logistical point of view, is the issue of identity. I mean, basically, to do financial innovation, you must map unequivocally one person with a set of numbers that are or characteristics that are unique to that person. It can be biometric, it can be in different forms. But if that doesn't work, the whole system will not work. And I think that oftentimes, especially very, very poor people, it's really sad to say that what they lack is an adequate identity, and that I think is so primitive. But I think that technology today can really help us jump that hurdle. I think another very important issue that the technology is bringing now is that for many, many years, we have been trying to deal with financial inclusion sort of in a piecemeal fashion, but what we have seen in very particularly in very successful cases like Kenya, like India, like the Philippines, to some extent Mexico, is that technology, and Kristalina mentioned this work, is that allows you to leapfrog. I mean, for many years, especially in the past, we were sort of trying to improve and affecting the margin a certain problem to make the system work better. But suddenly, and basically the legacy problems was like a burden in our, like a cannonball in our leg. But suddenly we can get liberated of those cannonballs if we embrace technology in a broad sense. I mean, not solving everything, but technology really allows you to start on a clean slate, and reduce many of the problems that are out there. Like, for example, one aspect that we're working at the VIS is precisely how, for example, if we have a whole new CBDC design, which basically implies putting new rails and completely different rails to make payments, you can precisely, and Kristalina mentioned that, make them interconnected and interoperable across the world, so that you don't have to depend on the correspondent banking network. Now, you see how correspondent banking works is one issue after the other. I mean, there are so many steps that you have to go through, from AML CFT, from Forex, from messaging, and so on and so forth. Things are not integrated, and therefore, if they're not integrated, and to some extent they're artisanally brought together, they work, but it's artisanally brought together. The costs are tremendous and the delays are huge. Now, what you can manage to do is to design everything integrally with integrity, so that you make a system that is consistent. So I think that's a huge opportunity we have, given what technology allows us today.
Yeah, the issue of CBDCs is obviously a big one, and even last night I was at a very small gathering, and we were talking also about this question of digital identity and just how important digital identity is, and trying to figure out where does that fit relative to other kinds of innovations. Dr. Georgieva, the IMF has made some interesting statements as well. I mean, certainly the BIS has been focused like a laser on this issue of CBDCs, but the IMF has also made some very interesting statements in the world of cryptocurrencies. Certainly, some people view that as a kind of correspondent banking a solution, but the IMF has really spoken out carefully, but over time more explicitly. Maybe could you share a little bit more about sort of the IMF's posture and what cryptocurrencies like Bitcoin may mean for the IMF? And then when you hear the conversations and you think about that CBDC, central bank digital currency conversation, how does that all fit, again, in this larger discourse on innovation?
But the main objective of the IMF is to make sure we have financial stability and macroeconomic stability. And so we look at the question of money from the perspective of how it serves the economy to create more dynamism and to connect different actors in a way that is both good for growth, but it is also good for stability. So we look at the issue of digitalization and money in the following way. First, we have central bank digital currencies. They do what central banking authorities are supposed to do, which is to create finality in settlement and to have a credibility, trust of the population. So there is a very important role for the development of central bank digital currencies in that sense of what traditionally central banks do. Then we have e-money or stable coins, private sector issued. They are backed up by assets, and those that we see picking up most effectiveness and use, like M-Pesa or the USDC, they are exchangeable in the national currencies. They produce a digital equivalent of what we have had over the years with fiat money. And then we have crypto assets. They are not backed up with assets the same way CBDCs are backed by the state and privately issued digital money are backed by assets. Why we are careful about crypto assets? Because they are more like an investment opportunity than they are in the traditional way of serving as a stable storage of value, and one that you can rely on in daily operations. So if you are a finance authority, very difficult to have a budget that is based on a crypto asset where the value of this asset goes up and down. Very difficult to plan your expenditures. And that is why we differentiate between CBDCs and e-money, stable coins, and crypto assets from the perspective of a monetary policy that is based on predictability of the functioning of this asset. Now, this being said, I want to stress that for us at the fund, it is critically important to recognize we need both the public sector to engage, and we need the innovation that comes from private sector. Agustin said something very important. Regulation matters. If you look at the e-money and stable coins, they can deliver a lot to the economy, provided they can be trusted. And that trust is related to a sound regulatory environment. I would love to see more of this public sector, private sector collaboration, where the public sector does its part well and the private sector does what the private sector is fantastic for, to innovate. So one side regulates, the other side innovates, and the result is we have a more dynamic economy.
Yeah, we've certainly seen from the international community, and you know, hat tip to the BIS and talking to some of the staffers and looking at some of those pilot projects. You know, an interesting degree of coordination across the board. You know, if we're going to look forward, particularly with the BIS, you know, the BIS for sure does more than just CBDCs. We talked briefly about digital identity. We've had now a comment on stable coins. But you know, when it comes to targeting the question of inclusion, this is our Inclusion Day. Over at the BIS, are there any other kinds of potential projects that you have in mind in terms of expanding the inclusion debate and the work of the bank?
Yes, of course, there are many different issues that are being worked at the same time. One is just to take, for example, the idea of the India stack, where you have payments, you have identity, you have systems to authorize your data to do different forms of transactions. I think that the India stack is a great innovation that has been put on the table by India, and I'm sure that Nanda, we will hear from Nanda Nilekani about it. That can be multiplied, and that can be made much broader, and I think that's a path forward. That doesn't depend, for example, on CBDC. Another very interesting project that we have is that most countries have already RTGS, and many of them has fast payments services. So what we're trying to do is, instead of waiting to have a network of CBDCs, is just to hook up, interconnect in an efficient way those RTGS systems and those fast payment systems.
Yep.
We talked about regulation supervision. We're doing a lot of work on RegTech, SubTech. We know that, for example, in remittances, a huge cost come from AML CFT, come from foreign exchange transactions.
Yep.
So how can you automatize them in such a way that AML CFT and the issue of foreign exchange is made seamless? And you know very well, AML CFT is an issue not only for international payments, but is also extremely relevant for domestic issues. So there is the scope of how can we use innovation to improve inclusion is huge. Another very important chapter we're working on, it's a very key discussion, is how can we use data. We know that financial transactions, especially on the credit side and so on, depend on data. Now, who owns that data? Who can use that data? For many people, that the only way that the bank can know them is through their transactions. How can that data on transactions be used is very relevant. But we need to have very clear rules. So that's another huge area where we are engaging just to make this possible. As I said at the outset, we need to act from different sources at the same time and bring together a critical mass so that financial inclusion really can leapfrog in the coming years.
Yeah, it is definitely not your grandfather's BIS. That particular list of things it's almost when you think about the origins, you know.
And it is not your grandmother's IMF.
It is not. I was just about to say, you know, we have about 30 seconds, but I saw the TV land did not see you shaking your head in approval of these things. I didn't know if you had with just a couple of seconds left, like any other interesting things that you wanted to add? I just saw that you were very enthusiastic.
I just wanted to say that we need to think comprehensively. Digital identity matters tremendously, but so does privacy, and how we connect all these dots for a world in which we can trust the digital space. It is doing good rather than underpinning crime, and it is helping more people to be part of the economy, contribute and benefit from that. This is our task.
Wonderful. Yeah, I'm very much looking forward to actually next week and going back to class and literally breaking down this conversation in its component parts. Thank you so very much to both of you for coming. You're wonderful, and I appreciate it. I will now be passing on the baton to my colleagues over at the BIS to talk about the India Stack and to talk with one of the individuals who can be truly credited with changing the face of a country's economy and the global economy. But again, thank you to you both for joining us.
Thank you.
Thank you. Bye-bye.
Bye.
Good morning. Many of you are joining us over breakfast in the Americas, on tea in India, and over dinner in Hong Kong. So